Hi everybody, this is a special coverage of what happened today in markets, Thursday, March 10th. You'll see it on Friday, where perhaps euro dollar will already be at a different level. We had one of the craziest days in markets. The ECB made its decision and did a lot. Let's list the things we learned today. The negative deposit rate was lowered as expected from -30 to -40 basis points. Check. The big surprise came from the lending rate that was lowered from 0.05 to 0%. Nobody was talking about the lending rate. It's the first change since September 2014. That was another significant move. QE was expanded from 60 billion all the way to 80 billion. Yes, that's 1/3 more at the higher end of expectations. Very dovish. In addition, the ECB announced 4 new TLTROs, adding more substance. It also announced it would buy, from now on, corporate bonds, non-financial investment-grade bonds, as part of its mix. It said it has no problem reaching 80 billion. And they changed the rules regarding what bonds they can buy. Now it was a limit of 1/3, now it's a limit of half the bonds in a specific issue. All in all, a huge delivery. We've seen euro dollar fall from around 109.70 to all the way to 108.20. Very nice, 150 pips, Draghi delivers, Draghi goes dovish, all the nice headlines. But then during the press conference, we had a change. We have seen euro dollar bounce back up. The main reason was that Draghi said that he did not see a need to cut rates further at this time. That contrasts what he said earlier. That is a repeat of the regular statement, this forward guidance that is with the ECB already for around 2 years, that rates will stay at current levels or lower, okay? But saying that they will not cut them further was devastating for the impact. Let's look at the chart and see this whipsaw. So this is the euro-dollar charts. That's a 30-minute chart. Let's go to the 15 minutes just to have more emphasis on the time of the decision itself. It's clear to see when we had the decision, this candle here, a big fall under 109.60 support, eventually all the way to 108.20. This is a double bottom on the chart, the level we've also seen last week, okay? And from there, we had a change in direction. We didn't go further. We didn't go further to 107.70 or 107.10 levels we mentioned. We had a move. We found here this even triple bottom, and then we had a move to the upside during the press conference. This is quite a wild move. We completed almost 300 pips from 108.22 to 111.14. 292 pips. At the time that I'm recording this, we're back to 110.25. Okay, so about nearly 100 pips of the extreme end of the bounce are already erased. Okay, and that's what's going on in euro dollar. What else did we learn from the press conference? We learned that the decision was not unanimous, but there was an overwhelming majority. That inflation forecasts have been lowered once again. So did growth forecasts. And we learned that the ECB is afraid of the secondary effects of oil prices. Okay, I see this press conference and the decision itself as 99% dovish, and I believe that once markets calm down, we will see euro dollar falling because the ECB did deliver a lot. Not only in absolute terms, but also in comparison to early expectations. The pressure on the euro will remain huge. And this big bounce that we're seeing during the press conference, I believe it will fade. When you guys will see this video, perhaps you'll say, Yohay is talking nonsense. Euro dollar is already at 112, 113. My bias remains to the downside because the bottom line is the ECB did a lot and the door is actually still open to do more. Other than that, in the markets, on Friday we only have the Canadian jobs report. The Canadian dollar had a nice week with Bank of Canada remaining neutral, not so dovish, and jobs report could have, I hope, well, positive impact. We'll have good news hopefully from there. We also had jobless claims today in the United States, also came out better than expected, 259,000. The US dollar is playing second fiddle. Well, the whole market is playing second fiddle to Mario Draghi. Next week, we have the Fed decision and the decision from the Bank of Japan. Both are significant ones. From the Fed, we have forecast and fresh forecast and the press conference from Janet Yellen. From the Bank of Japan, we have a special guest there, Joseph Stiglitz. I think that what Draghi did today allows the Bank of Japan to do more negative rates, more QE, more everything. The Fed is not expected to raise rates, of course, but they might. I believe they will not be extremely dovish because recent figures have been okay, and that will have more or less the regular cautiousness from the Fed. My bias is that we'll see a stronger US dollar against both the euro and the yen. Well, thank you very much, everybody, for watching this video. Sorry I cannot make it to this Friday's show. I hope we have here sort of a wrap-up of what we had and a little bit of what we can have, we can see next week. And see you all on Monday. Next week is a full week. We'll have lots more of excitement, including digesting what we had today from Draghi. The event is still going on. The choppiness still continues. I'm with one eye on the charts, one eye at the headlines coming out from the press conference. I'm very glad we have volatility and excitement. Okay, so that's it for this special video, and see you all on Monday. Have a great trading day and a great weekend as well. See you and bye-bye.